The session has been made live on YouTube, and we'll be sharing the link of that on the chat, so that you or any of your colleagues can also go to YouTube and see the session from there, the live session. So we have this link from where you can also go to YouTube and watch the session live from there. You can share it to your friends, etc. Also, who can also see from here if they're unable to view or hear from this Zoom group chat.
I think we can start, sir.
Yes, please start.
Just 1 second. Good afternoon, all the participants. I'm Shubham, and on behalf of Webtel Electrosoft Private Limited, I would like to welcome you all to the last day of week 2 of GST WeGyan webinars, which was on practical issues and case studies on important topics of GST. I hope the entire week was very exciting, and we received a lot of comments appreciating our initiative. We're bringing you best speakers. So I would like to tell about the company. So the Webtel has the best range of compliance softwares and integrated services, from GST, invoicing, TDS, tax, XBRL to other professional products like Virtual Office, WebEdge. We already have a customer base of around 40,000 professionals and big corporates. Before we begin with the webinar, I would like to request all the participants to kindly switch off their videos. I also request all the participants to kindly use the chat box to post their queries, which will be answered at the end of the session. Also, I would like to introduce CA Rajeev Khandelwal ji, Director of Webtel, to say a few words and introduce our speaker of the day. So over to Rajeev, sir.
So today's speaker, as you're aware, is CA Shankar Narayan, and he's a chartered accountant and cost management accountant with over 15 years of experience in financial and taxation compliances, spanning across various diverse sectors, including banks, service sector, and manufacturing sector. And he has specialization in indirect taxation, particularly in GST, customs, and foreign trade. With these words, I request Shankar Narayanji to take over and deliberate on the topic of today, which is GST refunds, issues, and latest developments. And I think we all are interested in refunds, getting refunds as fast as possible. So I think everybody is interested. And so, Shankarji, you can begin right away.
Absolutely, yeah. I'll start off with thanks to Webtel for organizing and taking this initiative. We'll just directly jump into the topic of GST refunds. The discussion today is going to be around the GST refund, which is, as rightly pointed out by Mr. Rajeev, one of the beneficial parts wherein most of us are interested in finding out what is the methodology in which we will be able to obtain the refund. Now, this discussion is going to be predominantly focused on certain issues that one would face, certain misconceptions or ideas which are wrongly conceived for getting refunds, as well as the latest developments. We have had circulars after circulars right from 2017 July, and in November 2019 it was all aggregated, and one consolidated circular 125 by 2019 was issued, and on 31st March 2020, hardly 25 days back, a circular overriding certain portions of circular 125 was also put in place, which had overridden certain provisions of circular 125. So let's go through all that, try and see to what extent as practicing people in GST will be able to leverage the understandings. Now, to set the context, refund, on what are the scenarios under which one would approach the department for refund is either we would be seeking the refund of input tax credit, or we would be seeking the refund of the tax that has been paid by us. So the input tax credit which lies in my credit ledger will be sought as refund, or I have paid the tax, so I am seeking the tax as refund. I will seek it from the government. What could be the possible scenarios under which I can ask this refunds? To start off, in case of input tax credit, if I have done a transaction which is termed as zero rated. Now, what is zero rated? We'll see a little later in the presentation. So if I am doing any zero rated transactions, then I am entitled to seek refund of my input tax credit. On the other hand, I can also have a scenario called as inverted duty structure. I just give a brief idea of what is this inverted duty structure. Later in the presentation, we will also see the depths and even with the case study. What is inverted duty structure is the rate of duty, the GST on my output is lesser than the rate of GST on my inputs. Take a typical example of my output being taxable at 5%, whereas my input is taxable at 18%. What does this lead to? I will have more input tax credit at any point of time, even if I am discharging all my output tax liability using my input tax credit. So that would mean still I have more input tax credit. So only in two scenarios, I can seek refund from the Department of Input Tax Credit. One is when I have made zero rated supplies, and second one is when I have made some inverted duty structure transaction. And when it comes to zero rated, there are two parts to a zero rated transaction. What is zero rated? Section 16 subsection 1 of IGST elucidates, and it says that zero rated are only two transactions. One, it has to be either exports meaning directly sending from India to a place outside India. It could be goods, it could be services, or it is supply to an SEZ. The supply to an SEZ is treated at par with exports, and together these two transactions, the transaction of making an export, the transaction of supplying to an SEZ, are together called as zero rated as per section 16 subsection 1 of the IGST Act. And the other scenario under which I will be asking for refund would be my tax. Why would I ask the tax as refund? Possibility is that I have erroneously paid in excess what I should have paid. I have paid something in excess. That could be a scenario under which I will seek refund of the tax that is paid, or the other scenario is zero rated. For some of you who are trying to understand refund from the basics, you might be surprised that why zero rated I can claim refund of my input. In zero rated, how can I claim the refund of my tax as well? Now, for a same transaction, both cannot happen. That is, if you do not pay tax on your output of zero rated, then you can claim only the input tax credit as refund. Whereas on the other hand, even for my zero rated transactions, that is an export of goods or services or supply to an SEZ, if I go ahead and pay the tax to the government, then I can seek refund of the tax that I have paid. So the zero rated can either come as an input tax credit refund, or it can come as refund of tax paid, but it cannot come on both at the same time. So this possibility is something which we have to be clear about. So I can either go and claim the input tax credit on my zero rated that is accumulated. The output of zero rated has resulted in accumulation of input. I can claim the input as refund, or I can pay the tax to the government using the input, maybe some cash also, and then claim the tax that has been paid by me as a refund. So two scenarios. This is how the basic context has to be set and understood for claiming refund under GST. Now moving on, the zero rated can again be exports and SEZ. What is zero rated? Section 16 subsection 1 is what I want to bring about here, and also try to demystify one of the popular misconceptions. Zero rated supply means any of the following supplies of goods or services or both, namely export of goods or services, or supply of goods or services or both to a special economic zone developer or a unit inside special economic zone. The first thing I want to clarify here is the section does not say anything about supply to an SEZ, whether it is for the purpose of authorized operations or not. There is no mention, there is no restriction in this section. Hence, the person who is supplying to an SEZ need not worry much about whether it is for an authorized operation or not. It is the SEZ which has to be worried, or when we get a acknowledgement when we supply to an SEZ, that is something which they have to deal with. So for us, as long as we are supplying anything to an SEZ, whether it is goods or service, it is clear that it is a zero rated supply. The second part which I wanted to highlight here is the circular of June 2018, which clarified that an SEZ is taking the services of a hotel or a restaurant which is situated outside the SEZ. Now, can that outside the SEZ, the people from the SEZ come outside into that restaurant and take their services? Can that restaurant still charge them CGST and SGST? The circular has categorically said not possible. As long as you are supplying to an SEZ, you shall treat it only as an interstate supply. Hence, it will be a zero rated supply. That is, a supply made to an SEZ is always an interstate supply falling under zero rated supply. And the most important part in section 16 is the next one, which is understanding the different types of supplies that are there. Now, taxable supply, zero rated supply, I put on one side. The exempted supply, non-taxable supply, nil rated supply, non-GST supply, I've aligned them on the other side. There is a specific reason, because of input tax credit related provisions. What I have put on the left hand side of the screen, which is taxable supply and zero rated supply. If a person is doing a taxable supply or a zero rated supply, then only the person is eligible to take input tax credit. On all the supplies that are on the right hand side, the exempted, not taxable, nil rated, the person will not be eligible to take input tax credit. So if a person wants to avail input tax credit, there has to be an output which is taxable or zero rated. So this is something which is the fundamental of availing input tax credit. Section 16 puts this condition in place. Hence, we have to know from a refund perspective that taxable supply and zero rated supply can alone make me eligible for ITC, which can subsequently be used for claiming refund. Now, there is an interesting scenario which comes out of this. The scenario that comes out of this is the scenario of exempted supply. So I have taken an example of one of the exempted supplies, Messias Namak Limited. They are manufacturing salt, which is exempt from GST, and they sell the same within India as well as export it. There is no other business for the company. Now the question is, are they entitled to claim input tax credit? From what we have seen so far, people can be tempted to think my product is exempted. So when it is exempted, can I avail input tax credit? No, should be the answer. But this is where section 16 subsection 2 clarifies that even if it is an exempted good or a service, if it is going to be exported, if it is going to be supplied to an SEZ, that is falling under the purview of zero rating, then it shall be entitled to be called as zero rated only. So what does this mean? This company, which is manufacturing salt, for all the sales that they are making within India, the corresponding ITC cannot be availed because it is pertaining to an exempted output. Whereas the ITC pertaining to exports can be availed by them for the simple reason, though it is an exempted item, the transaction is zero rated. Hence, the basic difference between zero rating and taxable, exempted, nil rated, non-GST is that the taxable, nil rated, non-GST, not taxable are all goods or service specific. A good can be called as taxable or not taxable. A service can be called as taxable or not taxable. But in case of zero rating, it is not the case. Zero rating is for a transaction. What is the underlying goods or service is immaterial. What is the nature of the transaction? The nature of the transaction is in the nature of export or supply to an SEZ. Then it shall be squarely coming under the category of zero rated. Moment it comes under the category of zero rated, we will know that we are eligible to take input tax credit and further even claim refund. So this is something which is very basic, which is elucidated in section 16 itself, which I have shown as the last line. The credit of input tax credit may be availed for making zero-rated supplies, notwithstanding that such supply may be an exempt supply, because exemption to the item or service doesn't matter as long as it comes within the purview of zero rating supplies. Now, what is export of goods? Export of goods, clearly defined as with its grammatical variations and cognate expressions, means taking goods out of India to a place outside India. Very, very important definition. To what extent it is important? I'll give a simple example. I have placed an order with a US company. The US company is sending the goods. As the goods are coming, I have got a buyer in Andhra Pradesh. So me situated in Chennai, I'm selling it to a person in Andhra Pradesh. So how do I sell the goods to him? Very simple. I can transfer the goods by transfer of document of title to goods. I can make him the owner. Under the Sale of Goods Act, it will still be considered as a sale. But look at it from the perspective of GST. The goods have not even entered into India. The goods are still coming to India. In other words, we can call it as high seas sale. They are yet to even come to India. In this case, there is no transaction of supply at all. GST says there is no supply at all in this case, because this type of transaction is classified under Schedule 3. Schedule 3 says this is not a supply. Hence, this can never come as part of imports or exports. The second example could be, I am sitting in Chennai. I am getting an order from a person situated in Dubai. Let's say he is asking for palm oil to be supplied. Now I am sourcing the palm oil from Malaysia. The Malaysia person, I tell him that please bill to me sitting in Chennai, but ship to the person in Dubai. And I call up the Dubai person and tell him the goods will directly reach your Dubai seaport. I will raise an invoice on you, please pay me. So what I have done sitting in India is I have done two transactions. I have done one purchase from Malaysia and I have done a sale to the person in Dubai. So what have I done? I have done two transactions, a purchase and sale, but technically under GST, it is neither an inward supply nor an outward supply, because Schedule 3 says it is not a supply at all. So hence, for some transaction to be treated as export of goods, there must be physical movement of goods from India to a place outside India. It should move from India to a place outside India. So very intricate is this provision that they have told by way of a rule, specific rule which is inserted in 2019, that if in the airports we have this duty-free shops, if these duty-free shops are selling goods to a foreign tourist, and they must ensure that the foreign tourist is leaving India, that is, they should, if they are selling it to a foreign tourist who is entering into India, it is not treated as exports. So if they are selling it to a foreign tourist who is leaving India, they are entitled to claim refund of their input tax credit. Such is the intricacy that lies in this definition, which says that taking goods out of India to a place outside India. When it comes to export of services, we see further conditions and restrictions put in place. Export of services as defined under 2 subsection 6 of IGST Act is what I have reproduced here, highlighting the key elements. As it is in the case of any of the exports, the expectation would be the supplier of the service is located in India and the recipient happens to be outside India. This is very straightforward. The third one is important. The place of supply must fall outside India. If the place of supply does not fall outside India, in other words, it falls in India, then it is not an export at all. That is the first outcome. The second outcome is, if the place of supply is going to fall within India, it becomes squarely taxable. So that is the risk that we are running. So when we want to call something as export of services, we must ensure that all these 5 conditions are satisfied. The first 3 conditions are the supplier should be in India, the recipient should be outside India, and the place of service should also be situated outside India. And the fourth one, very important condition, is that the payment for such service should have been received by the supplier in convertible foreign exchange generally, and wherever it is approved or permitted by Reserve Bank of India, should have been received in Indian rupees. Only then it will be treated as export of service. Very, very critical. The moment I raise an invoice for service, it doesn't become an export of service. Only when the money is realized, it becomes an export of service. That is the importance of this definition. And the supplier of service and the recipient of service are not merely establishment of the same entity. They are not part of the same distinct person. That is the last condition that we need to satisfy. We are part of the same entity, though we are situated in two different countries, it will not be treated as export of service. So export of service, 5 conditions are in place as against export of goods, which has got only one condition, but that condition is sound enough to take care of the movement of goods from India to a place outside India. And in case of export of services, all the 5 cumulatively need to be satisfied. Then only we can call it as export of service. Then only it will become a zero rated supply, entitling us to go for a claim of refund. And moving further, zero rated, when we further drill down into exports and SEZ, how I can do these transactions. So I am a person who's going to do export of goods. I have got 2 options in front of me. It is either export of goods or export of service. What I can do is I can do the transaction, that is the export supply, with payment of IGST or without payment of IGST. What is the difference? I will not pay tax on my output, that is without payment of IGST. I will pay tax on my output at the prevailing rates, that is with payment of IGST. Now, if a person is intending to do that, then what is the refund scenario for that person? In case of SEZ also, that is when I am making supply to an SEZ, in that case also, I have the same luxury. I can decide whether I make a supply to an SEZ with payment of IGST or without payment of IGST. If I decide to do this, what is my outcome in terms of refund? Now, this is the critical part. If I am going to make export of goods or services with payment of IGST, if it is going to be goods, so I'm making exports with payment of IGST and the subject matter is goods, the refund is automatic. I need not even apply for refund in the GST portal. How does it happen? When I make the export of goods with payment of IGST, I mention the fact that I am paying IGST in the shipping bill. In my GSTR 1, table 6A, I mention the shipping bill number, I mention the port code. The moment my GSTR 1 matches with my shipping bill in the IceGate portal, my refund of tax paid is automatic. So hence, the exports with the payment of IGST route for goods, there is no cause for concern in terms of GST refund application. We don't have to apply, it is automatic. Whereas if it is with payment of IGST, a service, or without payment of IGST, supply to an SEZ or outside India, whether it is goods or service, with the payment of IGST, whether it is goods or service supplied to an SEZ, in all the other combination of cases, refund application has to be made to the local officer or the proper officer. So this is the context of refund. So what I have tried explaining so far is when I would be able to get a refund, and inside those, in zero rated transactions itself, when are all the situations that I may have to apply for refund and seek the refund, and what are all the facilities that are given to a taxpayer in terms of with payment of IGST or without payment of IGST incorporated into this refund mechanism. Now, moving further, how can I make an export or supply to an SEZ without payment of IGST? Now, that is where Rule 96A comes to our help, which says that yes, the person who wants to make those zero rated supply has an option to do those without payment of IGST, but that person must execute a document called as letter of undertaking, LUT. This letter of undertaking is given by the taxpayer directly to the President of India, assuring certain clauses. Now, when it comes to RFD 11, that is the letter of undertaking, it is very easy to obtain. And initially, in the year 2017-18, we had ambiguity or confusion in terms of how to get it manually. All that was resolved from 2018-19 onwards, from which time it has been made completely electronic, matter of quick process. You can just click on the yes buttons and then go ahead and say that yes, this is, I agree to this, and then give the witness names. We will be able to get the LUT. And they have also told in circular number 37 that whatever the ARN that is getting generated for the submitted LUT application shall be deemed to be our LUT number. This LUT number shall be quoted in all our invoices which are made for the purpose of exports without payment of IGST. So there are two questions here. One, is LUT eligible for everybody? The answer is no. As per the circular which was given way back in October 2017, the person against whom there is a adjudication, prosecution which has happened for a value worth more than 2.5 crores, then the person cannot go by the LUT route. The person will have to submit a bond or a bank guarantee as expected by the proper officer to safeguard the department's interest. So this is not the straightforward route, but in 99% of the cases where there is no prosecution that has happened against a person, LUT can be readily obtained. And once this LUT, letter of undertaking, has been taken, especially for the purpose of doing the exports or supplies to SEZ, the condition that we have to be very, very careful, which many of us either know or some of us may not even be aware, is that if it is going to be export of goods or export of services that we are going to do under LUT, we are actually undertaking, this is only in case of exports, that we are undertaking that if it is goods, the goods shall go out of India within 3 months from the date of my invoice. Let us assume today I am raising an invoice on which I am not paying IGST. I am going under the option of LUT. Now the IGST, without payment of IGST invoice that I have raised, the goods which are mentioned in that invoice should have been leaving India within 3 months from the date of the invoice. During this COVID lockdown period, this 3 months will get extended. It may not apply, but in a normal scenario, this 3 months will get counted right from the day the invoice was raised. So this doesn't happen within 3 months. We are termed to be a person who has breached the condition of letter of undertaking. What would happen? I will tell you what is the consequence once we discuss the service element also, where there can be a breach. In case of export of services or supply to a, say, services which is made to a person outside India, where I have not realized the money in convertible foreign exchange within 1 year from the date of invoice. So in case of goods, the restriction is to send the goods. That is, the goods should have left India within 3 months. Whereas in case of services, there is no question about what services is rendered. The question is only about the services rendered or not, whether the invoice is raised. If the answer is yes, invoice has been raised, then within 1 year from the date of invoice, whether the money has been realized in convertible foreign exchange. If
Shankarji,
yes, sir.
There's a small question here regarding LUT for the next financial year, which is running 2021. Whether the earlier LUT will be applicable or what will happen in this case?
As per section 168A, which has been inserted by the taxation ordinance, what has happened is any extension, that is the LUT which is expiring on 31st March, but actually from 25th of March or 20th, I should say, as per the notification, we are having a lockdown scenario. So what they have told, any kind of document that we need to file, any kind of returns or information that we need to give from 20th of March till 29th of June, all those, the due dates shall stand extended to 30th of June, which means the LUT are submitted for the last year itself, that is submitted for 2019-20 itself, has a extended validity up to 30th June 2020. So we would have to submit the fresh LUT, or if we need to submit a fresh LUT, we need to do it from July. If you had already submitted sometime in March itself, because the portal was open right from 1st of March and you had got an ARN, you can continue to use that ARN. There is no need to think that since I have got a ARN in March for 2021, but now that there is an extension, should I go back and use the old one? Not necessary. If you had already obtained the ARN for the LUT for 2021 financial year, please go ahead and use it. If you have not obtained, don't worry, you have got an extension up to 30th of June. You can take it forward from there.
Okay, thank you.
Yeah. And now the next part, when it comes to services, the collection is more important. And when it was goods, there was no impetus on collection. It was more in terms of sending of the goods outside India. And suddenly from 23rd of March 2020, this is the amendment which took us all by surprise. Rule 96B has been inserted in the CGST rules, wherein a condition has been inserted, and it is not only for LUT related transactions. They have simply said that export realization must happen in convertible foreign exchange for all the export of goods. So whether it is under LUT or whether it is tax paid and exported on payment of IGST, which is the first scenario that we discussed about on the map of refund, where I told you that we don't have to apply for refund at all. It will be automatic. So in those scenarios as well, what has been told is, as long as you are doing an export of goods, there must be a realization in convertible foreign exchange, and the time limit has not been defined in that rule. What they have told is they have borrowed the time limit from FEMA, Foreign Exchange Management Act, as per which the time limit shall be fixed. So the normal time limit as well as the extendable time limit under the Foreign Exchange Management Act shall prevail. So under that time limit, generally the time limit is 9 months to 15 months, depending upon what is the transaction that we do. 2018 January 12th is the latest circular that has been given under FEMA for this purposes. So under that, what they say is it could be anywhere between 9 months to 15 months, depending upon the transaction that is being done. So within that time, I must realize the money in convertible foreign exchange. Very, very important point for all of us, because for whatever exports related refund, especially for goods that we had realized so far, and we have also got the refund, there is no problem. But if there is going to be a scenario where we have got the refund, but the assessee has not realized the money in convertible foreign exchange at all, then there is a very good chance for the department to invoke these provisions. Though they cannot do it retrospectively, they might still say that they have the time limit of 2 years or 5 years or 3 years, as the case may be under section 73 or 74, and say that it is a wrongfully obtained refund. So watch out for this amendment, which is directly impacting the forex collection. So this is the kind of latest development that has happened, which is further clamping down the restriction on refunds. So where there is an expectation that the money should be realized in convertible foreign exchange, we are now pushed one step backward. What we may have to do is either we have to wait for the realization and then apply for refund, or if the assessee is preferring, especially in case of goods, to go for a refund automatic route, that is, he is going for IGST payment. In those cases, as consultants or as advisors or auditors, we may have to check whether subsequently it is getting realized. Because if it is not getting realized within the time limit fixed by FEMA, we may have to qualify it in our GST audit reports or our company audit reports, as the case may be, in certain scenarios. So this is the new restriction coming into place from 23rd of March 2020. Moving on, there was a confusion initially. It is settled by and large now, and a judgment is also in place in Gujarat High Court, which has settled it beyond doubt. But the reason for the ambiguity was the element of duty drawback under section 75 of the Customs Act. Now, duty drawback is a sort of an incentive that is given under the customs for people who are making exports. And when GST was introduced into July 2017, what did not happen automatically was that the duty drawback rates which were existing during the excise regime, which is the regime before to GST, there were two types of duty drawback rates. One is for the persons who are availing SENVAT credit. A lesser duty drawback rate was there. And the second kind of duty drawback rate was for people who are having a higher duty drawback because they were not entitled for SENVAT credit because they could be a trader. So two types of duty drawback rates were existing in excise period. These two rates were not merged, were not revisited. It continued as it is in July 2017 also. So that is when section 54 subsection 3 proviso, there is a restriction that if you had taken any kind of drawback for the central taxes or the integrated taxes that the goods have suffered or the services have suffered, you are not entitled for duty drawback. This restriction was in place, which prevented certain people who had claimed a higher rate of duty drawback during the period of July, August, and September 2017. Why am I restricting it to the first 3 months? Is because the duty drawback rules 1995 was repealed and a fresh set of duty drawback rules were put in place from 1st October 2017. By virtue of this new duty drawback rules, there was no problem from 1st October 2017 for anybody to claim duty drawback as well as claim GST refund. But for the first 3 months only, we had a confusion or an ambiguity wherein people claiming higher duty drawback were not given refund, or when they were given refund, the refund was asked to be paid back to the department. All that got settled by the case laws that had come from Gujarat High Court subsequently. But do we have a problem now? Absolutely not. From our 1st October 2017, duty drawback rules in place clearly tells we are only giving a very small amount as duty drawback, and that is only towards the customs duty or the excise duty for which the ITC is not available, which might be imbibed into the product selling price, which we want to pay it back to the assessee who is exporting as an incentive. So it is a settled position that from 1st October 2017, you can claim duty drawback as well as GST refund, no restriction, no mutual exclusivity. And in case of refund of state level taxes, state level levies, there is no problem at all. ROSL, there is no such restriction. We can claim ROSL, and at the same time, we can also claim GST refund as well. Now, the other misconception which I wanted to demystify is merchant exporter, notification 40/2017. Who is this merchant exporter? This merchant exporter is a person who procures the goods from a person who's selling within India, and he directly exports it. So what he does is he procures the goods and he exports it. There is a conception that this person is an deemed exporter, or he is a person who is the penultimate exporter, as it was called in the erstwhile sales tax regime. So he is the penultimate seller. So should I treat him as export? Absolutely not. Let me give a simple example. Mr. A is selling to Mr. M, who is the merchant exporter, and Mr. M, merchant exporter, is exporting it outside India. Now the transaction between Mr. A and Mr. M is certainly not export. It is not deemed export. It is nothing. It is a normal transaction under GST. GST has to be charged depending upon whether it is an interstate movement or an intrastate movement. GST is applicable. Then what is the significance of this notification? This significance the notification brings about from October 2017 is that these people, the merchant M who wants to export it outside India, if he is able to give a declaration to this supplier Mr. A that I am a merchant exporter, I am not going to sell any part of it within India, I am only going to do an export, then he can procure these goods from Mr. A not by paying the full GST. It could be 12%, 18%, 28%. He need not pay that. All that he needs to pay is only 0.1%. If it is IGST, 0.1%, or if it is CGST and SGST, split it into two, 0.05% CGST or 0.05% SGST. There is no need to pay the full GST. But please remember, this is not a zero rate of transaction. It is still a transaction which is a taxable transaction under GST. A question might arise. So this is giving rise to an excess ITC in my case. For example, I have got inputs. That is, I am Mr. A who is selling it to M, merchant exporter. I have got inputs procured at 18%, but when I am selling it to Mr. M, merchant exporter, I am selling it only at 0.1% IGST, or in total 0.1% CGST and SGST together. So my input tax credit will always be more. Yes, my input tax credit will get accumulated. That input tax credit shall be claimed as refund under inverted duty structure. That refund cannot be claimed under exports or zero rated. So this is what has been clarified multiple times by the department. Even in our GSTR 9, we are supposed to show it under taxable supplies, B2B supplies only. This cannot be shown under deemed exports or zero rated. So the merchant exporter transaction notification 40/2017, please bear it in your mind. And moving further, there is one more thing which is coming in GST, which is a new term. This was not there. This
2-3 questions. Can we take them first?
Yeah, please go ahead.
Okay, so Poonam Jan is asking whether duty drawback and ROSL is exempted or non-taxable.
Okay, duty drawback and ROSL are not even supplies. These are incentives given by the department. There is no supply there. So we need not even worry about them. They are non-GST is what I would say.
Okay. Then there's another question from her that refund rejection for time barred in case of excess payment of tax is not in cash ledger. Whether I should file grievance, intimation or appeal, amount involved is 1,20,000.
Sorry, I didn't get the first part. Can you repeat it?
Refund rejection for time barred in case of excess payment of tax is not there in the cash ledger. whether it should they should file a grievance, intimation, or appeal.
I'm not able to get it. You have paid in excess, but it is not in cash ledger. That is what you are saying.
Yeah, refund rejection for time barred.
Understood.
Not
The
with-
refund has been rejected, stating that it has got time barred.
Yeah.
But what relevance cash ledger has got here?
Poonam, could you elaborate on the question and then we'll take it up. And there's another question that I had applied for refund online against export and also filed documents manually in July 2019. AO has issued PMT 08 in February 2020 without any other action earlier. What is the course of action now?
We have got no other option but to go for an appeal.
Okay.
Yeah.
They have to file an appeal, right?
Yes, yes.
Okay, please go ahead.
Yes, sir. So deemed exports, notification number 48/2017. Now, another important provision, as I was saying, GST has this uniqueness. Exports do not include deemed exports. The word exports is under the IGST Act. It is not under CGST. And the word deemed exports is figuring under section 147 of the CGST Act. The word deemed exports do not even appear in the IGST Act. So what does that convey to us is deemed export is never part of export. So deemed export can never become my zero rated. So deemed exports is separate. It has got a separate treatment under GST. Now, what are those deemed export transactions? That is what has been brought about by this notification 48/2017, wherein they have said 4 different transactions. Supply to an EOU, supply to an advance authorization holder, a person who has got an advance authorization under the DGFT to procure goods from outside India, but he decides to procure it within India by taking an invalidation letter. In those cases, if I am supplying to that advance authorization holder, yes, in those cases, I can call it as deemed exports. The third one is a similar transaction, which is the EPCG, export promotion of capital goods transaction. In this case also, I can say that it is considered to be a deemed exports. And then the last one is sale of gold by banks to the advance authorization holder. These are the 4 transactions which can be termed as deemed exports, and only these can be termed as deemed exports under GST. Why there is a special mention for deemed exports? Because they have got a certain different method of treatment when it comes to refund. When it comes to the deemed exports, the refund application can be either made by the supplier or by the recipient. Again, it is either by the supplier or the recipient. It is not by both of them. I'll explain it with a simple example. I am an EOU. I procure goods from Mr. X. Mr. X supplies the goods to me worth 100. He charges in the invoice 100 plus 18. I do not pay him the 18. I pay him only 100. Now, he has borne the burden of that 18. He should pay the tax to the government. And after having paid the tax, he can go for claim of refund. If he is going to bill me 118, I pay him 118 as an exporter. Now, I am an EOU. I need not have paid him that 18, but still I paid him that 18. Now, this EOU, who is the recipient, can claim refund of this 18 because I have now borne the burden of that GST. So for the same transaction, both supplier and recipient cannot claim. But for this type of deemed export transaction, anyone, either the supplier or the recipient who has shouldered the tax amount can claim refund. And it is not a zero rated supply refund. It is a separate refund application which is available in the refund application screen itself, wherein we can see deemed exports refund by a supplier, and next line will be deemed export refund by a recipient. 2 things will be there. It is to specifically tell us that either the supplier or the recipient can claim. You should decide your situation, whether you are claiming it as a supplier or you are claiming it as a recipient. Again, the point that I need to convey very clearly is deemed exports is not zero rated. Like merchant export is not zero rated, deemed exports is not zero rated. This has got a specific place to be reported in GSTR 1, which is table 6C. And same way, this deemed exports, when it comes to GSTR 9, should be reported separately in table 4. As you can see that we'll be reporting it separately as deemed exports. So hence, these are 2 commonly misunderstood things as exports, but these are not considered as exports for the purpose of refund or for the purpose of whole of the GST law. Moving forward, the most critical aspect when we are applying for refund, especially when it comes to input tax credit. Whenever we are applying for refund of taxes that have been paid, there is no issue because the amount of tax need not be calculated. Whatever tax I paid, that is the amount that is going to seek as refund. But whenever it is an ITC, which I am claiming it as refund, that is when this formula mentioned under Rule 89 sub Rule 4 is going to come into the picture. What is that formula? The refund amount shall be undergoing this formula to arrive at what is the refund amount. The turnover of zero rated supply of goods plus turnover of zero rated supply of services. That shall be my numerator, and my denominator shall be adjusted total turnover. And I have to multiply this with my net input tax credit. The formula is simple, straightforward. Zero rated supply of goods or services shall be the numerator, goods and services, if you are having both, divided by adjusted total turnover multiplied by net ITC. Now, the terms that are there in this formula are the ones which are a little difficult to understand, or something which are even difficult to digest. The latest insertion is this. 23rd of March 2020, this has come into being. Turnover of zero rated supply of goods. So services, there is no mention here. It is only with respect to turnover of zero rated supply of goods, means the value of zero rated supply of goods made during the relevant period under a bond or letter of undertaking, or the value of which is 1.5 times the value of like goods domestically supplied by the same or similarly placed supplier as declared by the supplier, whichever is less. Now, this is a restriction that is being brought about. The value of my zero rated supply of goods alone, what is this restriction trying to do is, I want to take whatever amount you say is the value of export of your goods, agreed, but I want to put a restriction that it is either the value that you are showing as export or 1.5 times the value of the goods domestically supplied. Let us say I am selling talcum powder. I am exporting talcum powder. I am also selling it within India. They will take the price of the talcum powder at which I am selling it within India, 1.5 times of it. Don't get me wrong here. They are not going to compare my turnover, my local turnover vis-a-vis export turnover. No. One talcum powder, let's say a pack, I am selling it at 100 rupees within India. If I say I am exporting it for 200, department would not allow me. They will still take in the numerator of turnover of zero rated supply of goods only 1.5 times the value of the goods which are domestically supplied. So the maximum price that they will take in the numerator is only 150 rupees. They will not take 200, which is my actual selling price, to outside India. This is a new restriction. Every one of us is going to go through any refund application in future, especially for goods. We'll have to go through this. Now, there might be a question, sir, if I am a 100% export oriented unit, then how will they know what is my domestic supply value? Which is where they have put that comma and put those words, similarly placed supplier. So it is not necessary that they should pick up the price of me only selling it to open market within India. They can also pick up the price of a similar supplier like me, of a person who is selling the same goods within India also, and take that price, calculate 1.5 times of it, put it in the numerator for the purpose of calculating this. So if I am selling it at 200, still I'll be getting a refund only to the extent of 150. So this is going to be a challenge for refunds to be applied in future, where there is going to be a huge margin. As such, 50% margin is what they have allowed. 50% margin, I mean over and above the margin that we have for a domestic supply. Still, if there is going to be a type of business, supply of goods, where I'm expecting more than this 50% over and above my local supplies, I may not be getting that much of refund. That is the indirect impact of this restriction. And what is net ITC? That again needs some amount of dwelling into the details. Net ITC means input tax credit availed on input and input services only. The conspicuous absentee in terms of ITC here is capital goods. So whatever ITC I avail on capital goods shall never form part of my net ITC. So what does that mean? The capital goods related ITC will not even come for the multiplication. Hence, I will not be getting any portion of it as refund when I am making a claim for refund under GST for the purpose of turnover supply to a zero rated supply of goods or services, ITC refund is being sought. The ITC that will be taken into consideration is only the ITC that is pertaining to input and input services. Capital goods will not be considered. And what is this adjusted total turnover? Which is my total turnover, but it will be devoid of my exempted supplies. The supplies on which I don't have to, or I don't become eligible to take ITC, that is being removed, because understandably, when on exempted supplies, I have not even availed ITC. Why consider it in the denominator for calculating my my ITC refund claim? More the denominator, lesser will be the refund. So this is actually good for the assessee. Exempted supplies shall be removed from the denominator, and the turnover of supplies in respect of which refund is claimed under 4A or 4B. What is this 4A and 4B? This is nothing but what we have seen 2 slides earlier, that is the deemed exports and merchant exporter. These 2 transactions, our refund application is separate, so we need not club it here. We should not take those turnovers here for calculating our refund. That's it. So this is the easiest way to understand the formula, which is again turnover of zero rated supply of goods or services divided by adjusted total turnover multiplied by my net ITC. The new restriction or the challenge that has come is this 1.5 times the value of the goods domestically supplied by the same or similarly placed supplier. Now we move to the next part, which is apart from the export related transactions or the zero rated transactions. I told you there is another scenario where I'll be able to apply for refund, which is inverted duty structure or inverted tax structure refund. 54 subsection 3 is the one which says that where the credit has accumulated on account of rate of tax on inputs being higher than the rate of tax on outputs. As I said earlier, my output is going to be 5%. My input is going to be 12, 18, 28. In all those cases, we have a scenario of inverted duty structure. And what can I claim as refund? I can claim only the unutilized input tax credit as refund, and the time limit within which I can claim the refund is 2 years from the end of the month in which such claim of refund arises. So the time limit is 2 years from the end of the month. This has been highlighted because before 1st February 2019, it was from the end of the financial year. Within 2 years, we could apply for refund, but that is not the case. What they have amended from 1st February 2019 is that it is 2 years from the end of the month in which such refund claim arises. So we have to be careful about the 2 years condition in terms of this inverted duty structure. Now, how to go about this inverted duty structure? I am putting up the formula for calculating this inverted duty structure, which is again the maximum refund amount shall be on the numerator, the turnover of inverted rated supply of goods or services divided by adjusted total turnover. Now the numerator is something which is new for us, which can be easily understood. Turnover of inverted rated supply. So all those 5% rated goods, while my inputs are 18, my output is 5%. The turnover of 5% rated goods shall only form part of my numerator. I could have a scenario where my output can be 5 as well as 18 and my input is always 18. In that scenario also, I can go for this inverted duty structure claim, wherein my numerator will contain only the outward supplies on which I'm taxable at 5%, whereas my denominator will contain both the 5% turnover as well as the 18% turnover. So that is why this proportion has been built here, multiplied by net ITC. Now this word net ITC we have already seen, but I want to bring about a difference here. The net ITC, which you can see below the formula, net ITC means input tax credit availed on inputs. So what you would see missing here is input services is gone, as against the refund formula for net ITC as defined under 89.4 for the purpose of claiming export related refund or zero rated related refund. Net ITC would include input and input services. But when it comes to inverted duty structure refund, it is only inputs. So neither capital goods nor input services stand a chance for inverted duty structure refund. Once this formula is done, still it is not over. Minus, so we'll have to deduct from this answer that we are getting by this multiplication, tax payable on such inverted rated supply of goods or services. So whatever is the tax that I need to pay on the inverted structure, goods or services, I have to remove it. How we can understand is very simple. Let us say I'm selling only 5% goods. All my inputs are going to be 18%. Then on the first part of the formula, the answer will be 1 because my total turnover will be equal to my inverted turnover. So into net ITC. So net ITC will be my total ITC on inputs minus the tax that I have to pay. Let's say I have to pay 5%, whereas my ITC is 18. So net ITC will be 18 minus 5. The maximum refund that I can get is 13. That is how it has been structured. So more your other turnover, lesser will be your inverted duty refund. Here again, care has to be taken while calculating this formula. The time limit and this formula are quintessential for obtaining this refund. I've tried putting a numerical example to understand the intricacies of this inverted tax structure refund. Look at a scenario where inputs, I am procuring 3 different kinds of inputs, 5%, 12% and 18%. So I'm having 1 lakh, 2 lakh and 1 lakh respectively, the purchase prices of those, and the GST value being 5,000, 24,000 and 18,000 respectively for those inputs. Input services I'm procuring worth 1 lakh and 50,000, where 18% is the rate of tax, so I end up paying 27,000 for input services. And for my capital goods, I paid 5 lakhs, 18% GST also, and that takes my GST value to 90,000. So if I look at an ITC credit ledger of this person, the total ITC that will be available for this person will be 5,000 plus 24,000 plus 18,000 plus 27,000 plus 90,000. So all these 5 will be eligible as ITC. Look at the next part, my output, which I have done, output of goods or service, whatever I am doing it as output, it is taxable at 5%, and I have done an output worth 8 lakhs. So my GST liability comes to 40,000. How does the inverted duty structure formula work? Assuming this is the only turnover that I have, the net ITC is 47,000 minus the tax payable on my output, which is 40,000. So why I have taken net ITC 47,000? Because net ITC for the purpose of 89 sub rule 5 is only the ITC that is pertaining to inputs. So the input service is 27,000 and the capital goods 90,000 goes out of the picture. We should take only 5,000 plus 24,000 plus 18,000, which is 47,000. 47,000 will not be given as refund, less the tax payable on my inverted duty output, which is 40,000. So the maximum refund that I can seek from the government under this 89 sub rule 5 formula is only 7,000. So this is inverted duty structure. And please note, a common mistake people do is they think that my input, which is procured at 5%, that ITC I need not consider for the purpose of calculating the net ITC. No, that should also be taken into consideration. No need to think that my input is also 5, output is also 5, let me leave that 5 out. No, the formula doesn't say that, neither the circular 125 says that. So though my input is 5, output is 5, that should also be taken. My input is 12, my input is 18, output is 5. Those ITC should also be taken. The restriction is only inputs related ITC should be taken. Input services and capital goods related ITC should not be considered at all. Once we are able to understand this, I think we can easily apply for the inverted duty structure refunds straight away. And moving further, we have also to be careful to note this notification number 5/2017, which has undergone subsequent changes also, which I have given over there, amended by 3 other notifications. So the basic notification is 5/2017. What is this basic notification? It says that there are situations where there could be inverted duty structure, but for these goods or services, we will never give inverted duty structure refund. Like for example, supplies to railway, there will never be a inverted duty structure refund. Though my output is going to be taxable at 5%, my input could be 28%, refund is not available. Where is it told? It is told in notification number 5/2017 as amended by 29 and 44 of 2017 and 20 of 2018. Textiles and fabrics were under this category 5/2017. Those were removed by 20/2018 sometime in July 2018. So please be aware of this notification before seeking refund for inverted duty structure. Moving on, the critical element, which is the time limit within which we can apply for refund. I think earlier also there was a question in terms of time limit. Yes, time limit is critical because we have crossed more than 2 years from the date of GST being implemented in India. Hence, the 2-year time limit is what we have to remember. What is the time limit for application of refund? The time limit for application of refund is 2 years. But when does the 2 years starts is the critical question. The 2 year would start in different scenarios in different dates. So for example, in case of export of goods, if I am doing it by ship or aircraft, then the date on which the ship or aircraft left India, from that date within 2 years, I can apply for refund. So it is not the date on which I raised the invoice. Let's say I have raised the invoice on 31st March, but the ship or the aircraft which carries those goods and leaves India only on 1st July. Then my refund timelines would start from 1st July, 2 years from there. And if I am going to send it through post or courier, in those cases, the date of dispatch by the post office, from there within 2 years, I can apply for refund. And in case of by road export of goods, which can happen to the land border sharing countries, in those cases, the day on which it crosses the customs frontier, I can apply for a refund. From there within 2 years, I can apply for a refund. So the 2 year timeline is not directly from the date of invoice. We have to be understanding in case of goods, there is something else that is being put in the works to understand. And on the right side, when we want to look at export of services, what is the date from which I have to calculate this 2 years? It is either the date of receipt of payment or date of issue of invoice, whichever is later. Why this complication? It is not complicated. It is easy if you break it down. Let us look at a scenario 1 where invoice is raised first and payment is received later for a service. Technically, as per 2 subsection 6, only when I receive the payment in convertible foreign exchange, it actually becomes a export. So it is not an export of service until and unless I realize the money in convertible foreign exchange. Hence, 2 years from the date of receipt of payment, I am entitled to apply for refund. If it is the other way, that is scenario 2, where the money comes first, then I do the services and maybe raise an invoice later. In those situations, I still don't have a problem. What I need to do is I need to consider my date or reckon the 2 year starting period from the date of invoice, because that is when it is considered to be a service, not when I receive the money, because at the time when I receive the money, it is only an advance, which is why I have put it simply. It is either the date of receipt of payment or date of invoice, whichever is later. From there only the 2 year time limits commences. And in case of deemed exports, what we saw in terms of the 4 different transactions under notification number 48/2017, the date of filing of returns shall be the date from which or rather I should say the due date for filing of returns for the month or the quarter for which the person is filing. From that day, within 2 years, the refund application will have to be made. In all the other cases, the refund application shall be 2 years from the date of payment of tax. Earlier, there was a question which I asked for further details, wherein the question was that excess payment has been made. Correct. If you had made excess payment, 2 years from the date of payment is when we can apply for refund. There is a direction in circular 135 also in this regard, which we will see little later in the discussion about circular 135. So this is the critical part of time limit pertaining to refunds. And the other part which the practicing professionals will have to be very aware is the unjust enrichment. The word unjust enrichment, the doctrine. Yeah.
Shankarji, how much time do we have for the presentation? Should we wait for the questions in the end, or can we take some questions just now?
Yeah, I can take some questions now.
Okay, so I'll be asking a few questions. Just a minute. There's a question from Uma Shankar Goswami that a call center established in India during sale in USA earning commission in foreign currency, is it cover export service and claim 0 rated?
It is a call center which is established in India and you are not part of the same entity. That is, it is not a branch, it is a separate entity. Then yes, you can claim it as export.
Okay. Okay. Then there's a question from Rajkumar. We as export oriented unit made export on payment of IGST, but customs not releasing refund. So what can they do?
It is a procedural snag. You have to check with customs as to whether what is the reason. There could be technical problems also. GSTR1 not flowing into customs ice gate. So we need to check with the customs department for that.
Right. Then there's a question from Vineet Kanodia. What are the documents required from merchant exporter to deemed exporter?
merchant exporter, there is a separate set of document. Deemed exporter, okay. From a point of view of a person who is selling it to the merchant exporter or a deemed exporter, what we need to have is, when we are selling it to a merchant exporter, we must get the copy of the purchase order. First, it has to be submitted to our jurisdictional officer, and subsequently, after export, within 3 months of us selling to him, he should have exported the goods. The shipping bill must contain our GST number and our invoice number also. That shipping bill copy should be given to us. This is for merchant exporter. When it comes to a deemed exporter, Form B, the person should maintain 2 registers, Form A and Form B. He should have applied in Form A, and then he should give me Form B acknowledgement, the deemed exporter. Only then I can say that I have sold it to a deemed exporter.
Okay. Then Himanshu Tandon is asking a question that the department has processed refund, not issued RFD 05, and it is still pending to be issued till date. So how can it be approved as 5 months already passed? Again, I think they'll have to write to the department only. Again,
exactly. And the other point that I can stress here is, if the refund order has been given, but the payment has not been released more than 60 days, we have a right to claim 6% interest from the department.
Right, right. And then duty drawback and ROSL is no supply or incentive. Whether we will show it in GST R9, GST annual return.
Absolutely. Whatever comes on the credit side of your P&L has to be shown. Let us say a dividend income. We still show it under no supply. Yes, it has to be shown.
Okay. And Umashankar Goswami is again asking a question. I have applied GST refund and received refund order from department. Again, that's a procedural thing. They have not been paid. Okay. Then what value of export should we consider in adjusted supply, whether it is actual export value as per books or 1.5 times value of domestic value?
The refund application will be restricted to 1.5 times the export value. Now, please understand, as I told earlier, some of the people are misunderstanding this provision that my local turnover is 1 crore for the month. The export turnover is 3 crores. They are thinking that I'll get refund only to the extent of 1.5 crores. That is not the case at all. Okay. If an item is being sold outside India, the same product is sold in India, one number, what is the price at which you are selling it within India? That into 1.5 times is the maximum price which they will consider for export related refund. There might be a scenario where you are selling it for 100 rupees in India and you are exporting it only for 120. In those scenario, you will get the whole 120 as the numerator and get the full refund. There won't be any restriction on it.
Okay. And there's a question from Poonam Jain that excess payment of tax has been made by mistake in 17-18. For how many years can I adjust the excess tax paid with my tax payable? I think there's no time limit for that.
Yes, the time limit is there, which is 2 years from the date of wrong payment. 2 years from the date of payment is the time limit, which I told you is the general time limit. So if the 2 years from the date of payment has expired, you will not be able to get through the officers. I suggest that you either prefer an appeal or you take it up. The reasons have to be clean enough to prove that it is not your negligence which has resulted in 2 year time period lapsing. Then you can take it up on appeal, else a writ petition in the High Court would be in order.
Not only refund, even adjustment of tax payable cannot be done?
If it is excessively paid, the money is already gone from your cash ledger.
Right.
So there won't be a possibility of me adjusting it anywhere unless the officer gives it back to me.
Okay. Then from Harish Butra, there's a question: how to calculate and prove the price at which goods are exported are within 1.5 times?
I'll go back to the same example, sir. A product is being sold within India for 100. If it is exported outside India, if you are exporting it for 110, 120, 130, absolutely no problem. You can claim your export turnover, that is number of units multiplied by that respective price. But the moment you are selling it for 100 within India and you are exporting it for 170, then your 170 will not be the numerator for calculating the refund, ITC refund. Only department will consider 150. So that is where the restriction will come. It is not against your local turnover. The restriction is the price at which it is being sold within India vis-a-vis 50% hike is allowed for exports.
Okay. So he's also asking, is there any time limit for zero rated refund?
Absolutely. Zero rated refund is arising because of export. or it is arising because export of goods or export of service. So that restriction will absolutely apply.
Okay. Then there's a question from Neeraj Agarwal. The registered person exported goods with payment of GST and claims refund for that. Is the refund of GST paid on inward supplies available?
Refund of GST paid on inward supplies.
Yeah.
If you are entitled for input tax credit, yes, you can take it as input tax credit. And moment is taken as ITC, you become eligible for ITC refund, then you can claim.
Okay. Then Manoj Garg has asked, if we have inputs with multiple rates of taxes, then refund will be received for all the inputs ranging from 5% to 28%. What all is used for output supply, whereas our output is 5%?
Yes, in those cases, like the case study that I had shown with the numerical example, you will be getting all, or you should consider all the ITC into the calculation. But remember, only the inputs related ITC should be taken. Input services and capital goods should not be considered.
Okay. And finally, there's a question from Shubham Vats. I had applied for refund manually for 17-18. Application was rejected. Then what should I do? Should we file a appeal, or what is the course of action?
For 17-18, you don't have a timeline open now. So the 17-18, the suggestion is to go for an appeal or for a writ petition. The amount is going to be huge because officers will not have the right to process anything beyond 2 years.
Okay. Thank you. You can continue the deliberation.
Yeah. Okay, unjust enrichment, as I was on the topic, what is unjust enrichment and how we need to look at it is, if I have got the money, that is, I have billed somebody and he has paid me the money, can I claim the refund from the department also? If you do that, that is what is called unjust enrichment. The tax that I have mentioned in the invoice has been given to me by my customer. I also claim the ITC or the tax from the department, then it is considered to be unjust enrichment because twice you are getting benefited. But this unjust enrichment will not be checked if you are doing exports, which means if I am doing exports with the payment of IGST, I collect the IGST from my foreign customer, plus I apply for refund with the department. They will not stop my refund. They have to give me refund. Section 54 subsection 8 says that, yes, in case of exports, we will not check. But for people who are consultants or advisors in GST, you have to be careful. The word used is exports and the word used is not zero rated, which means if you are supplying to an SEZ and the SEZ has paid the tax, then we cannot even go for applying refund because you have got enriched by the SEZ. Then if you go and ask for refund also, it becomes unjust enrichment. So the word is export here. It is not zero rated. Same way, when I am applying for unutilized input tax credit under subsection 3 of section 54, no unjust enrichment check, refund will be given, and refund of tax paid on a supply which is not provided at all. I have received the money, but I never provided the service. I give the money back with a refund voucher. They have to give me the tax back. There is no unjust enrichment check in that case. And then section 77 cases where instead of paying CGST and SGST, I have paid IGST or vice versa. In those cases, whatever tax that I have wrongly paid, if I apply for refund, they have to give me without doing an unjust enrichment check. But please remember, in all these cases, what has to be seen is that refund application should be within the timeline. The 2 years time limit is still applicable. Within the 2 years time limit, they will not check any other provisions. They will still give you this refund for these scenarios. And the last one, which is a practice area for cost accountant and chartered accountants, is that if the tax and interest or any amount is paid by the applicant, but he has paid it in excess, he has paid mistakenly, and he has not collected it from anyone, not passed on the incidents, then this person can apply for refund. And in this case alone, the chartered accountant or cost accountant certificate is required if the amount of refund sought is going to be more than rupees 2 lakhs. So this certificate is not required in any other scenario. It is required only in this case, 54 subsection 8 clause E, and only if the amount is going to be exceeding rupees 2 lakhs. And if the refund is applied and government is of the view that the unjust enrichment clause will get attracted, that is, the person has already got the money and he is also seeking refund, they will simply credit the money to the consumer welfare fund. It will not be reaching our bank account. And now we get into the procedural aspect. Few things that circular number 125 brought to the fore, and few things that have been clarified by circular number 135, which is the recent development. The practical difficulties that we would have. Circular number 125 2019, it has already clarified that when it comes to ITC on inverted duty structure, we will consider only inputs related ITC for the refund processing, and it will never be anything other than input. So this has been put in the provision, put in the rules, also clarified multiple times in the circulars. And the next one is, what is the circular telling to the officers? Circular number 125 has already clearly laid down that the officer is instructed to process and dispersal order should be made within 45 days from the date of ARN. The practical difficulty that we have is, we submit the application, we get the application's reference number, but subsequently there is a deficiency memo that is issued. If that is there, only when the deficiency is satisfied, from that day, within 60 days, they have to make the payment. It is not the day from which we submit the application. It is the day on which it is accepted by the department. Hence, that 60 days is not to be reckoned from the day on which I press the submit button. It is the day on which the officer has accepted after going through all my documentation. And what is inputs? The circular has clarified, because in some of the cases, refund applications have been rejected, saying that how can you avail credit for stationery items, a pen, pencil and all. But as per the provisions of section 16, the definition of inputs is satisfied. I can avail input tax credit. It could be anything. It need not be directly resulting in my finished goods. It is used in the course or furtherance of business, and it is not a capital goods. I can claim it as inputs and avail the ITC. So they have clarified in circular number 125 that yes, that stand is right, and people will have to be given those refunds, because those invoices people tend to overlook and say this amount I will not give as refund, which is not right. Circular 125 comes to our aid. And compensation cess. There are industries where compensation cess input is there and compensation cess output is there. There is no problem. But we are looking at a scenario where I've got compensation cess ITC and I am exporting it. In those cases, what can happen is, the compensation cess ITC that is accumulated can also be applied as refund for this by this person who is making a zero rated outward supply. This has been clarified by circular number 125, relevant for all of us who have got accumulated compensation cess. But please look at the time limit, 2 years, whether it has expired or not. In circular number 125, another practical difficulty, very, very practical and important difficulty which has been clarified is, the invoice from my supplier is dated August 2019. Though his invoice is dated August 2019, I am availing the ITC in September 2019. I am applying for refund for the month of September 2019. Few of the officers have rejected this application or not given the refund of the ITC, stating that the ITC pertains to August. And circular number 125, it has been clarified amply that no, ITC pertains to the month in which it has been availed, not the invoice date as given by my supplier. My supplier's invoice date is August, does not mean the credit pertains to August. It only pertains to the month in which I have availed the ITC. What is availment of ITC? The moment we report it in 3B and it gets populated in my credit ledger, that is what is availment of ITC. So this is clear and clarified. In this juncture, we had a difficulty when we had to cut across financial year, which we will see by circular number 135. Now, this is the latest development. Circular number 135 has brought in the bunching of refund application. That is, I can apply across financial years. Earlier, this restriction was there. For example, if I am having a procurement in the month of March, I am exporting those goods which I procured in March only in the month of April. Then what happens is, it is cutting across 2 financial years. So earlier, I was not able to apply refund for this because the earlier circular 125 was restricting me, saying I can apply for refund across any periods. That is, I can apply for 2 months, 3 months, 6 months together, even 1 year together, but I cannot cut across financial year. This was the restriction which was imposed by circular 125, which has been taken down by the Delhi High Court judgment in case of Pitambara case, Pitambara Publications, wherein the department has taken that into cognizance and amended the circular 125 by way of circular number 135 by saying that we can apply for refund even cutting across financial years. So in this case, my procurement happened in March 2020, which is financial year 1920, and my export happened in April 2020, which is financial year 2021. I can still submit an application clubbing March and April and apply for one refund application, which is allowed. This is the latest development which has come into place from 23rd of March 2020. And the next thing that is which I feel is going to be very restrictive for us in Circular 135/2020 from 23rd March is that they have brought Rule 36 sub Rule 4 into their contention. Rule 36 sub Rule 4 was something which was amended or which was brought in from 9th October 2019 by notification number 2019 itself. What is the crux of this? Very simple. It says the ITC can be availed only if it is matching with 2A. And I can avail over and above what is there in 2A, but not to an extent of whatever I feel I can avail, not possible. I can avail only to the extent of 20% extra till December, and from January it became 10% extra. Now this has been taken into cognizance for refund applications, which is going to be very challenging, because what they have told is going forward, any refund application, only those ITC which are appearing in 2A and matching will be considered. So earlier in circular number 125, what they had told was there can be two types of ITC. ITC which is appearing in 2A and matching. Second is ITCs which are not appearing in 2A, but for which I am in possession of a physical invoice, so that I can upload the physical invoice copies and still get the ITC refund. This second option of ITC not appearing in my 2A physical copy upload has been discontinued. But what has not been clarified by this circular is that, are they going to do it for all the refund applications which are going to be submitted from 24th March 2020, or are they going to put this restriction in place only for those refund applications pertaining to periods after 9th October 2019? This has not been clarified. So there is a high possibility that either we will end up in a fighting course with the department, or we will see another circular coming into place. As of now, we are not seeing any circulars coming out for the simple reason the COVID restrictions are running. Hence, we are not seeing any circulars coming out. So what we need to be aware of is this point, that there is a restriction in Rule 36 sub Rule 4, which is going to come into place, which is going to have an impact on our refund applications. And the other point that has been brought out by circular number 135 is that the refund application, when we are making the annexure B, which has to be given as per circular number 125, it has been told the refund application GSTR 2A format. The GSTR 2A format has been amended, making things a little more complicated. They have added a column for HSN. So when I am saying that these are all the ITC that I have availed during the period for which I am claiming the refund, those ITC, it is not enough that we tell that the invoice number matching with 2A and all. We should also tell whether it is input capital goods or input services, as well as the HSN. If it is a goods, the HSN starting from 01 to 98, or if it is a service, the HSN starting with 99. That must also be mentioned in the refund application. This is again a new challenge. So 36 sub Rule 4 and the HSN for the ITC are going to be new, and these are going to be applicable prospectively for all the refund applications that we are filing. Will we be able to get this much of data? Will we be able to procure this data and give it in the refund application stage itself? Needs to be checked. But that is the requirement of circular 135, which is a challenge that is being put forth. So the last part with respect to the excess payment, something where I would say this is something which is more in relation to common sense. What was happening earlier was, if I had made excess payment of tax, I apply for refund of excess payment of tax, irrespective of how I paid the tax. I could have paid the tax utilizing ITC, or I could have paid the tax by cash. Irrespective of how I paid the tax, department would give me a refund in cash, which has been rightly questioned by the people concerned. So hence the department has come with a clarification saying, if I have paid my excess tax by using ITC, the refund will be given to my credit ledger only. It will not be given by way of cash. If I have paid the excess tax by cash, then that will be credited to my account. So this clarity has been brought in. Moment this clarity comes, we have another question. What if I have paid it by both? I have paid for this month's total liability using ITC as well as cash. Then they have come with an answer for that also in circular number 135 by saying it will be paid back. That is, the refund will be given in proportion. in proportion to ITC utilized vis-a-vis the cash utilized during the month. In that proportion, the refund will be given. ITC's proportion will be credited to credit ledger. Cash ledger's proportion will be given back as the money refund. So these are the procedural aspects which have been clarified by the circular 135. So the critical aspects are there for us to understand further and put to application in terms of our client scenarios. I think now I can take further questions.
Sure. There are many questions. I'll take them one by one.
Yes, sir.
One of the questions is not in fact a question. They're asking your email ID so they can connect with you for some GST work, etc. So you can
Which
share
is now
your
on
email
the which is now on the screen, so they can pick it up from there.
ID. Fine.
Yes, sir.
So we'll begin the next round of questions. There's a question from Vineet Kanodia. If 2 years has been expired, what can be done in case of deemed exports? Has this been answered already?
No, sir. In case of, I would answer it on a blanket manner. Anywhere where the time limit has exceeded, the only recourse that we have is the court. Because in the past, in excise as well as VAT on service tax, we have managed to get judgments in favor of the assessee from the court, but the officer cannot process it.
Okay. Then the question from Gaurav Kamboj. I am a trader and I have a CGST taxes excess in credit ledger. Can I apply for refund?
No, sir. Just because you have excess ITC, you cannot apply for refund. Only if you have done zero rated supplies, we can apply for refund or deemed exports.
Okay. Then there's a question from Praveen Garg as to whether import of software is services or goods. I think a separate session will be required on that. What do you say?
I will simply take a stand as it is a service because I still go by schedule 2.
Okay. And Raj Kumar asks, sir, all refunds filed, but custom is saying that EOU can be made export on payment of IGST.
I'm not able
Is
to.
the question clear?
No, sir. I'm not able to understand.
Even I think it's not very clear. I'll move on to the next one. There's one from Nirja Pahuja. We are providing HVAC contract work to government institution. Purchase is on 5% to 28%, but invoicing is on 12%. When we apply for ITC refund, our project will complete in around 1 year. When can we apply for refund and how?
You can apply even on a monthly basis, or as you are saying, it is going to be only 1 year. You can even wait for the 1 year period to expire for the project, and then we can apply because you still have 2 years for the first month. So which means first month you have 24 months. In 12th month you are going to complete it. So still you can apply even after the project.
Okay. And Raj Kumar asks, sir, all returns are filed, but customs saying that an EOU cannot export on payment of IGST.
Customs is saying that.
Clear?
Yeah, I have understood the question. I don't think customs has the right to say that. EOU can do that, yes.
They should file some kind of grievance or something?
They should take it up because customs has, in terms of EOU GST refund, if it is with payment, they have to process. That's it. There is no restriction.
Shankar?
Hello.
Yeah. I think it's okay now.
Yeah. Yes.
Okay. So another question from Sangeeta Dalvi. Can I use ITC paid on zero rated supply against domestic supply?
Absolutely. Utilization of ITC is governed by section 16 and say section 49. So as per that, if it is going to be inward supplies for the purpose in the course or furtherance of your business, you can use it. Yes.
Sir, one more question. GST paid on wrong number. 3B filed, but GSTR 1 not filed as there is no service. How to claim refund?
What you are saying is you have paid a GST wrongly.
Yeah.
You can, one, if you have raised an invoice and you have made the payment of tax, you should raise a credit note. Once you raise a credit note, see whether section 34 subsection 2 provisions are complied. If it is within the time limit, then in the subsequent tax payment, you yourself can reduce the amount of credit note tax and then make the payment. So you don't have to seek a refund. But if you don't have any further supplies against which this credit note can be offset, then also you can apply for excess payment of tax refund, which is possible.
Right.
Okay.
A lot of people.
Manish Irani asks, what value of export to be considered in total adjusted value while calculating refund amount as per formula, actual export value or 1.5 times value?
I have already clarified that it is restricted to 1.5. So if your value is going to be less than that, you have to calculate, you have to take the actual value only.
Okay. And Sangeeta Dalvi also asks for domestic purchases also. If I do not make further supply, can I claim the refund of taxes paid on my purchases?
No, all the ITC are not eligible for refund. Only if you use that ITC for making a zero rated supply or a deemed export, then only we are eligible for refund.
Yeah. Then Ramesh Pandey asks, are exporter filing refund, but by mistake GST refunds January 2009 filed 0. How can we claim this refund now?
You have to raise a grievance with the department seeking for opening your refund application one more time.
Okay.
Someone wants to know about the PMT9 form. If you can just tell a bit.
Yeah, the PMT9 form has been enabled. We have not tested it so far because we have not done any transaction. So there is no need for us to test it, which is actually a very welcome form that we were expecting it. That is needed.
Right.
The need for that was if I had wrongly paid cash under any one of the heads, let's say CGST, instead CGST, I paid it under IGST or any other such mishaps have happened. Earlier, I had to pay the correct tax again and go and apply for the wrongly paid head as refund of cash ledger. Now that is not required. Whatever tax I have paid wrongly under CGST, using this PMT09, I can move it to IGST or the other way around. So that is the benefit of this PMT09.
And this is only for amount paid. This is not for ITC, right?
No, this is not for IT. This is only for cash ledger. This is only for cash ledger.
Right. Then there's a question from Komal Gavade, circular number 135/2020. You need to require to mention HSN or SSC. Need to mention in statement B in case of refund on inverted tax structure. So I think whether it is goods or services, accordingly the code has to be mentioned, right?
Yes. Depending on all your inward procurement, now we are forced to find out the HSN and report it in the refund.
Then Shubham Garg asks how to mention HSN codes for invoices having multiple HSN items.
Which is why I said it is a challenge. So the HSN and 36 sub rule 4 are going to be a real challenge in any refund application which we apply from now on.
Okay. Alisha Garg asks, as per circular 125, annexure B is to be uploaded while filing refund application on account of refund of IGST on export of services. Please clarify which invoices are to be reported in annexure B.
I didn't get the last part.
Please clarify which invoices are to be reported in annexure B.
Okay. Post circular 135, only those invoices which are appearing in your 2A matching and on which you have availed ITC needs to be uploaded in annexure B.
Shubham, are there any more questions?
Sir, I can see just one more question, which is rendering one of the client is rendering comedy service in UK. Whether he is required to file LUT. Further, the time of supply is not certain.
Sorry, sir, I didn't get you. What is he doing?
He's
Sir,
providing some, I think, some
service.
stand-up comedy, etc. type of service in UK.
Okay, he's going there and performing.
Yes.
That is not clear actually.
Yeah, because if he is going there and performing, the place of supply itself goes outside India.
Yeah.
If he is doing it online, then the place of supply would fall here.
Yeah, so let us assume that he's going here. Right. So I think, sir, we have
GST paid on wrong number, 3B filed, but GST 1 not filed, as there is no service how to claim refund.
Yeah, I have answered this question. they have to go for the excess payment refund. Yes.
Okay.
In case of export,
Then Nandini Vyas
export duty, can we get the refund of output tax?
Not possible. In case of exports, ITC refund on those goods on which export duty is applicable, there is no refund that will be processed.
One more is management consultancy and advice services provided for handling issues in respect to period of corona. How manage business and without IGST paid? Or is it?
I'm not able to understand the question.
Okay, so I'll repeat it once again, sir. Can we raise export invoice for management consultancy and advisory services provided for handling issues in respect to corona pandemic?
Yes, absolutely. See, it is again a service. It is consultancy or advisory. You are doing it from India to a person outside India. Yes, you can. As long as you have an LLP.
We are in an EOU. Can we export with payment and get IGST refund?
Yes. The only condition that you need to be careful is when you have imported, did you pay IGST? That has to be seen. The customs notification number 72, whether you are importing only seeking the exemption of customs duty or you are seeking an exemption that is a waiver of both under the licenses, advance authorization license, both the customs duty as well as IGST. That you need to check.
Okay. The Neja Pauja is asking, there is GST TDS deducted by government institution. Will GST TDS be refunded along with extra ITC?
No, GST TDS is a amount which is getting credited to your cash ledger. You have the right to use that money for making the payment of tax. That's it. If you feel that money I will not be able to use at all in the future, I won't require that to be stay in the cash ledger, you can separately apply for cash ledger refund for that money. That should not be clubbed with ITC.
Then as per proviso, only the claim of unutilized ITC is restricted. In case of export duty, can't we claim refund of IGST paid on export?
Okay, 54 subsection 3. What you are saying is, if I go by the route of payment of IGST for export duty attracted item, will I be able to get a refund? Technically, yes, because there is no restriction, but I don't think the officers will give the refund because the idea is the goods are disincentivized from being exported. So when that is the intention, the refund may not be given.
Sir, I have a few questions from, we were streaming on YouTube Live, so I have a few questions from there as well.
Yeah.
So, sir, I have refund of IGST paid, but invoice number on shipping bill contain more than 16 letters. And my actual invoice number is of 14 letters. So processing or refund is stuck. What is the recourse?
It is more in the shipping bill. The only option that I have seen is only once we have done it. We were able to get the amendment from the customs. Then only it is possible.
The next one is the refund application is processed by AO and the refund status is showing as RFD 05 not issued. Could you explain what it means and need to be done further? Thank you.
No, I don't think we need to do anything. It is for them to process it further and give the, payment order.
Okay, sir. One more thing is GST portal is still allowing to submit refund application for 2017-18. Can we go ahead with filing?
No, it will still allow for the simple reason, as I told you earlier, for services, the 2 years period will start from the day on which the payment is received. For example, I raised the invoice in July 2017. But the foreign exchange was realized only in July 2018. That means from July 2018 till today, I have the right to claim that refund. So they have kept it open for that purpose. For goods, it should have traveled. Let's say 2017 July, I raised the invoice. 2017 July itself, the goods left India. Just because the portal is open, we cannot apply for refund. The 2-year time limit will be applicable there.
I think that's all with the questions, Shubham.
Yeah, sir. Nothing is unique there.
Okay. Another thing, we posted a poll regarding what time is suitable for you for future webinars, and we did this because one of the participants requested that from 12 to 1, Mahabharat is coming. That is why they are not able to join. So I just posted this poll, and most of the people, around 78%, say they are okay with this time. So we'll continue with this time only. And so probably the recording of Mahabharat, etc., is available. You can watch it there. I think I'll ask Shubham also to help you in that, providing you link for that. So we'll
Sure.
continue with this timing only. And with this session, we'll be ending for this week, and we'll be resuming next week from 29th April. We'll be talking about TDS on salaries for financial year 1920 and 2021. There are various issues due to extension of due dates. And also in the new year, as you're aware, we have 2 taxation schemes. So a lot of issues arise out of those. I would also request you to send questions regarding that. And finally, I'd like to thank the speaker of the day, Shankar Narayan. He's done wonderful deliberations, and I think we all have gained a lot from his deliberations. He's also answered all the questions very nicely. So thank you so much, Shankarji. And I also thank the participants for participating in large numbers and asking questions, making this session very interactive. So thank you very much. Shubham, you want to add anything?
Yeah, I just want to add a number, sir. With this week, we did 5 webinars, and around 5,000 people we connected through online or offline channels, direct webinars or the live streaming. So as per the popular demand, we are keeping this streak of webinars continued, and you can see watch on your screens the next week's schedule, which is starting from Wednesday. So we are taking. I'll just take a few seconds to let all the audiences know about that. So we are starting with TDS on salaries financial year 1920-2021, which is to be filed, I think, so on 30th of April. So it is very important for you to attend this, which will be taken obviously by Rajeev sir. Then on very popular demand, I think we connected more than 3,000 people for that webinar on MS Excel. So we are doing this again, and the topic for this time is even more interesting. So it's creating multiple reports from a single data via pivot charts and everything. So this is gonna be very unique and very useful for our clients and audiences of professionals. Right. So on Friday, we'll be taking GST place of supply. So we'll be discussing the various case studies. It'll be taken by Tushar Agarwalji. He has been appreciated in all our webinars. And at the last day, on the Saturday, we'll be taking impact on e-commerce. And the same will be taken by a very eminent faculty from Calcutta. He's Shubham Khetanji. So he's from Calcutta. And thank you so much, Shankaraji. We will love if you can join us later someday in the webinar series. I've already got a lot of appreciation for your presentations, and all the audiences, loved it, sir. Thank you so much.
Thank you. See you some other time. Thank you.
Thank you, participants,
so
for your lovely comments in the chat box. Okay, thank you so much.
Okay, bye.